Hello, thank you for being here. We have a great program for you today. We're going to be talking all about the FHA loans. For some of you who don't know who we are
Credit is life.
We do a lot of financial advice for you. So let's go ahead and dive right in. We're going to be looking first at the down payment. Let's go ahead and go into our PowerPoint. We're going to click on the down payment options. I'm going to move this to the side so I can jump on screen. And it's always important to know about the down payment options. So what we have going on is the fact that there are a lot of federal government down payment options of assistance that we have that we should really pay attention to. There's also a lot offered at the state, the county, and city level to help first-time home buyers find cash to put down. So look for these programs to help you find cash. It might be potentially free money that you can utilize to really help you with your needs as you buy your first home.
Do it.
Yeah, I would highly recommend you take a look in that, and I'll actually go and do my due diligence so I can have some more information for you on that as well. So contact these departments and economic community development centers. They can also inquire about down payment assistance programs offered by their employer if a home buyer is curious enough. So ask your employer if they have any information. It never hurts to ask. Now, each program may have different rules and requirements, but they all have some characteristics that you can have in common. A lot of it's going to be income-based. Others are going to require you to be a first-time home buyer. Some will require you compete and complete a home buyer educational course before applying for assistance. So see what the options are in your area and see what the requirements are and figure out what you may need for this in your future. Now, these down payment assistance programs for FHA loans are available for first-time buyers and homeowners who have not owned a home in the last 3 years. They often have a minimum credit score and an income limit. So keep an eye on that to make sure you're hitting these thresholds, particularly that credit score and the income limit. And they may require that you put 1% down and have that in cash. In some cases, the cost that it takes for a home-time buyer really wants you to have the education on it. So a lot of times you won't have to be so in the dark about the requirements. So don't be surprised if they do ask that you complete some sort of course or some sort of assistance education program. Let's go ahead and take a further look deeper in so that we can give you a fuller look at what we're talking about when we talk about eligibility for an FHA loan. So now we're going to be looking into the minimum down payment. It's always important to understand what your minimum down payment is, because this is really helpful for you to see if you're hitting the requirements that it's going to take for you to own a home. It's really important, if you would like to be a homeowner, to figure out all the rules so that you could really make the best of your opportunities. But you need to know, particularly the minimum down payment. That's going to be something that's going to be almost vital for you to own a home. Now, if you're in the market for a new home, you may wonder how much a down payment is going to cost you. You need to apply for an FHA loan, but make sure that you have enough of a credit score so that the down payment is feasible. Usually this is going to be about 3%. As a first-time home buyer, you can use a program to buy your home at 3.5%, the FHA. However, in order to qualify for the loan, you may need a 580 credit score and a debt-to-income ratio that is not higher than 50%. Moreover, your purchase may be your primary residence, not an investment property or vacation home, so keep that in mind. If you've recently been turned down for a mortgage, don't give up hope. You can shop around and find a lender who is willing to work with you. If it's your first application and you're turned down, you can work to repair your credit by submitting the application to several lenders. In addition, make sure that your monthly income doesn't exceed 31% of your gross monthly income. This ratio measures the total of debts and expenses relative to your monthly income. If your DTI is higher than this, you may be able to qualify for a lower down payment. If you don't have a lot of money to spare, you can look for a down payment from family members, friends, employers, or charitable organizations. Don't be afraid to ask. In addition to the down payment, you must be also able to pay the insurance premium. Depending on the amount of the down payment, you may need to pay up to 0.55% of your total loan annually. You can also apply for a higher down payment if your credit score is better than average. So this is important information for you to keep in mind. We are going to dive a little bit deeper in and take a peek into next credit score requirements. So let's go ahead and click, and I'm going to have to pick up the pace on the video so we can get all of what we want in. So credit score requirements. As I slow down, as I chuckle, I'm going to remind you to please
Like the video, leave a comment, and subscribe.
And I'm going to jump back on screen. We're going to talk a little bit about this if I can talk. Now, if you're looking to purchase a home in the United States, an FHA loan may be a great option. These loans have a lower credit score requirement than conventional loans. FHA loans definitely have a lower requirement, so keep that in mind. And they may be available to you if you have a credit score as low as even 500. But remember, you're going to need to put at least 3.5% down to get approved. So keep those magic numbers in. 580 credit score. Sometimes they can work with you as low as 500 credit score and 3.5%. You may get lower. If you have a VA loan, you may be able to do a 0%. But look at these numbers, 3.5%, 580 credit scores, maybe as low as 500 credit score. Try to aim for at least 680 credit score. Now, the FHA has made it easier for lenders to offer these loans to people with poor credit. However, lenders need to often get a co-borrower with a credit score higher to approve them. A co-borrower may need a credit score of 620 and above. That's another number to keep in mind, 620 and above. Now, we're going to have to move on to the next part so that we can make time for all the parts of the video. Let's go ahead and jump ahead. Now, next, this is also an important part. We are jumping ahead to income limits. So it's vital that you have enough money, that you're making enough. We're going to talk a lot about income limits very quickly. Let's go ahead and dive into the slide. All right. Now, income limits for an FHA loan depend on a variety of factors. They include the current interest rates and your debt to income ratio. So keep in mind your debt to income ratio and your current interest rates. Property taxes are considered part of your monthly mortgage payment and may impact your debt to income ratio. That's important to know. Your property taxes are going to play a role in this. If possible, try to find a home in a lower tax area to increase your eligibility. The cost of homeowners insurance is also likely to limit your purchasing options. The FHA will also consider your debt to income ratio, the DTI, which is the percentage of pre-tax income that you pay on debt each month. It's best that your DTI is below 43%. However, if you have a higher debt to income ratio, you may still be able to qualify for an FHA loan. All right. Very, very good information. We are going to move ahead so we have time for everything. And we're going right into our next part and final part of the video. And this is property condition. Let's go ahead and jump in. I got my lovely picture there. And let's move in and talk a little bit about property conditions. So an FHA loan is a good option for people with less than perfect credit scores, and they do not require a large down payment. However, the FHA has certain standards that must be met in order to be approved. And these standards include minimum standards of habitability and functionality. Because of this, borrowers can't use FHA financing for homes that are already in distressed state or in need of rehab work. That means sellers must be careful to ensure that their properties meet these standards. So make sure that the home is habitable before you even attempt to buy. If the home is in poor condition, the FHA requires an appraisal. This is done by a qualified professional who can identify any problems with the home. If the appraiser identifies any red flags, the lender will not approve the loan. This is a good thing because that means the borrower is less likely to face foreclosure. So hopefully that has been helpful information for you. I want to thank you for watching the video. And at this time, I'm going to please remind you to
Like the video, leave a comment, and subscribe.
and we will have more content and information for you very soon. Thank you for watching and be well.